With Geo. My name is Giovanni, and this is the first video that I'm doing for my website. I will do a formal introduction video at some point, but I wanted to get started making these videos, so we'll start with a recap for today's trading session. But a quick little backstory on me. I've been trading professionally for 5 years now, and I focus exclusively on day trading crude oil and S&P futures. By the way, this is the first time I've done any screen recordings in voiceover, so bear with me if I stutter or ramble on. I promise I'll get better with time. And as I said before, I'll do a more formal introduction video when I get some time. But for today, I just wanted to dive in, just show you how I trade. Yeah, let's get started. So we'll get started on crude oil today. This is the only market we'll look at. We won't look at the S&P today. I didn't take any trades on that pair, or that instrument, I should say. And so what I do on a day-to-day basis is essentially a top-down analysis. So I'll start with, so I have different chart setups for what I use to analyze the market. So what you're seeing right here is a daily chart of oil, and this is a chart that I'll look at first. It's the one I pay, I guess the least amount of attention to, just because I am a intraday trader. I execute a lot of the time on the 5-minute chart, but I will always keep an eye on this chart right here, and this is, what you're seeing here is a moving average chart. So I have the 200-day moving average here, the 50, the 21, and the 10. And, I kind of use this to, just see where price is in relation to these levels. A lot of the big banks, algos, they'll pay attention to the 200-day especially. Excuse me. So I always want to see where price is in relation to those moving averages. And as you can see here, if you're a crude oil trader, we're not in a very good spot to be trending. It's just been consolidating. It's stuck. I don't think I've ever in my 5 years of trading seen a daily chart where all the moving averages are just stacked on top of each other. Like, that's crazy. So no movement has been going on whatsoever. And so what you also see here are these zones and levels that I have marked out. These are your basic support and resistance, supply and demand zones. As you can see here, this zone, for example, resistance turned support, turned resistance, and now it's support again at today's price levels. So I always try to look at these zones where we're seeing a lot of support resistance flips, significant zones where the buyers and sellers are coming in. You can see the same thing for this zone up here in blue. Resistance, turn support, turn resistance, and resistance again. So this is a pretty, these two levels are pretty significant, as well as this one here, another support and resistance flip zone. When I'm looking at this chart, looking at the moving averages, I'm also looking at these levels. I want to see where price is on a macro scale. So yeah, I'll always keep this on one of my charts. I have a multi-screen set up at my apartment, so I always have this in the corner chart. So yeah, I'll start with this one, and then I'll move down to lower time frames. So we'll move down into another chart setup I have. This one, I kind of call it my main chart, as you can see up here. So I'll look at, basically what I want to do with this chart setup here is try to determine a bias. Like I said, I'm an intraday trader, and so the daily chart is great in seeing where we are in relation to higher time frame levels, but intraday trading, I want to see a little bit of a lower time frame. So I'll mainly use this chart for 1 hour analysis. And as you can see here, it's pretty simple. I just have an RSI and then a view up. So yeah, I'll look at this in the 5 minute, and then the 1 hour. And as you can see here, as we saw in this previous chart, just been consolidating. Not much movement at all. And there are still opportunities here because as you can see, every time it's touched this level right here, which is a lower time frame, I believe it was a gap at one point. Yes, so this was a gap. We've been seeing a lot of buying here. Good place to buy on the intraday level. So let's go back to the 1 hour. And as I said, I'll use this chart to mainly determine my bias for the trading day. And today for Monday, we were at about this level here. Not seeing much movement, just been going sideways. But one thing that really sticks out to me is that, as I said before, a lot of buying is going on here. But a different way of looking at it is there's a lot of stops below this level. There's stops below. Everyone's buying here, so everybody that's long, all the bulls, they're keeping all the stops here as well. And so, algos are looking to take those levels out. They want to get those stops, keep liquidity moving. So in today's trading session, what I was looking for was, I never try to predict where price is going. I always try to just go where the market's telling me. I think that's very important. I know a lot of people always say, you should start your trading day off with like a clear plan. But with me, I'm always just trying to follow price. Yeah, I can have an idea. As I said, I'm looking for a move down to take these levels out. But, you never know where the market's going to go. You have to follow where it goes. It's very tough to predict. Nobody can predict. So as I said, I was bearish here. So without any further, let's go down to E5 minute. So this is where I spend most of my time. And as you can see here, it looks a little cluttered, but don't worry, it's not that intimidating. I focus mainly on volume profile. So that's what I use to determine my entries and exits. And as you can see here, it's these little graphs right here, I guess you could call them. So I'll use those for my signals for entering long or short. Okay, so, and these columns right here, sorry, let me zoom out a little bit. So these are basically RTH sessions. So RTH stands for regular trading hours. And crude oil, RTH is from 9 a.m. Eastern Standard Time until 2:30 Eastern Standard Time, 2:30 p.m. So that's essentially what these are right here. This is previous week, and then this was today, Monday. All right, so let's get started. Whenever I start trading on a Monday, there's three things that I look out for. One is for the volume profile of the overnight session, or ETH. So this is what you see here from when Sunday opened until 8:55 a.m. previous to the RTH session. So this is what's drawn out here, as you can see. And then this is Friday, or the previous RTH trading session, which was Fridays, 9 a.m. to 2:30. So as you can see here, you have a good value area low and value area high. So a quick little overview on volume profile. It's essentially just it displays where the volume is being traded for that trading day. So as you can see here, the darker sections, this is what you call the value area. It's where 70% of that day's volume was traded. This yellow line right here is the point of control. It's the most traded volume that day, or that zone, wherever you draw it out. So this is Fridays, as I said before. You can see it's a pretty, what we call a bell-shaped curve, meaning that it was pretty, even on both sides. You saw buyers and sellers, both never really had control, just kind of went zigzag, whipsawed. So that's a good, it's a good thing to keep in your mind. It's balanced, as we saw earlier. A lot of consolidation. We're not moving at all. So that's something you always want to keep in your head. Okay, so as I said before, there's three things to look out for. The overnight session, which is here, previous RTH, which was Friday's regular trading hours, and then also the previous week's volume profile. So I'll draw that out with you here. So we look for the previous week, which starts here on Sunday. And we draw it all the way out until it closes, which is right here. Okay, so sorry, it looks a little cluttered. I promise I'll get better at these videos. I'll learn how to clean it up. But so this is the volume profile for that entire week, Sunday all the way through Friday close. As you can see here, this is where the value area is, the darkened portion. Also, I don't think I touched on this. This blue box right here is just that same level that we saw on the daily. That's where a lot of the buyers are. So I have that marked out, and as you can see here, like I said before, on an intraday level, it's pretty good buy signal. I mean, every time it touches, it's shooting up. So you can use that alone, even when it dips down below, it breaks back up, and it's a good buy. Okay, getting back to point. So this is last week's volume profile. And as I said, on Mondays, this is something that I always try to keep in my mind. I always try to look at it, see what happened last week, and see where we're opening in relation to that. So let's go back to today. So this column right here this was Monday's RTH. So that means at 9 a.m., we opened right here at the 56.24 level. So where is that in relation to the three things that I told you to look out for? So for previous RTH, we're opening above the POC, which is the point of control. And in relation to last week, we are essentially right around the POC, a little bit, where are we, a little bit below it, or right on it actually, which is also the POC of the overnight session. So, I always try to keep that in mind. If you're opening in value area, a lot of the times it can be a rotational day, meaning that it could just consolidate. So I'm looking for movement either above previous RTH's value area high, which is the high of this value area, which is marked up by this darker red line here, or I'm looking for a break below it, and then in either direction, I'm looking for a break, like a little bit of consolidation, a retest, and then I'll enter. So for today, for example, we almost immediately just shot right through previous RTH's value area high. This is a very bullish sign. And if you remember what I said was, I was looking to get short. But that doesn't matter. As a day trader, you have to constantly just adapt. You have to do what the market's telling you. If you're, bearish and you wanted to get short, but the market's going up, do not fight it. Always do what the market's telling you. That's very, very important. As discretionary day traders, we have to learn how to just switch biases and not look back. As long as you're following your trading rules and you're happy with the trades that you take and you're taking smart trades, that's all that matters. So let's get back to this. We immediately broke up. We broke previous session's RTH high, or value area high, sorry. And we also break the value area high of the previous week. So this is this line right here. Remember the previous week's volume area? This is the high. We broke right above it. And so what I'm looking for at this point is, I kind of want to be a buyer at this point. I see that we break it and we go up again on this 5-minute candle. So at this point, either we're going to break down below it and crash, it could be a false break, or we can consolidate, test, and then shoot higher. So these candles right here after this candle right here are very, very important. Once that I saw that we broke down below previous week's value area high, that's a very bearish sign to me. It could mean we're shooting up, we're getting a lot of buyers trapped. A lot of buyers are trapped at this level here. They're wanting to follow. FOMO is kicking in. People want to follow the price. They don't want to miss out on moves. As soon as I saw a breakdown below, I'm immediately turning bearish. It has to click like that. So usually what I like to see is a little bit of a retest, but this candle right here, this wick up and then a close back down is a very bearish sign to me. It's a good enough signal for me to want to enter short. So I entered on the candle right after it, which is this one right here. And the way I trade is I always take a 2-to-1 risk-reward ratio. So in this case, I risked 15 ticks to make 30, or 31 in this case, because you're always going to have commissions and spreads or whatever. So I always try to take a little bit more than 2-to-1. So in this case, once we broke back below last week's value area high, what am I looking for? I'm looking for Friday's POC as a target, which you can see here, and which we tapped pretty easily. I mean, it shot right down through it. In most cases, when you see a break of a value area high or low, and you see it immediately go back down, chances are it's going to test the other extreme. I'll try to explain that a little better as we go on in the more formal introduction video. But for now, bear with me. I promise I'll get more into detail, but I kind of just wanted to get, a quick start to these daily recaps. So like I said, you can target previous RTH's POC. That's a good target level. Usually you might see price stall for a little bit, which we did here. It bounced around a little bit, tested it, and then what did it do? It reached the extreme, like I was talking about, which is the value area low. So it touched it. So you could have taken that, taking that full profit. Like I said before, I like to take 2 to 1. Do not get greedy. Take what the market gives you. You know what I mean? But with that being said, don't just take any profit. Don't close your trades early. Let them play out. Do not be scared of hitting your stop. It comes with the game. We all take losses. It's what happens. Never, never move your stop loss and don't touch your take profit. If it's set, it's set. Always follow your trading rules. So, as I said before, I got out of this trade here, and let's just walk through what happened after that. So we touched the extreme of the value area low here, and we entered this blue box. And as you remember before, every time it's touched this blue box, it's been a buy. Okay, so ideally, I would have liked to see a break even below this, and then a retest, and then a further extension leg down. Chances are I probably wouldn't have entered again just because I did already take an early profit. But it would have been nice to see going into Tuesday's trading session because it would have given me a very, very strong bearish sentiment. But of course, that's not what we saw again for, I don't know, maybe the 8th or 10th time it's touched this rectangle box. We saw a lot of buying pressure. So this is a very strong level. And it's good in both regards. It's showing that there's a lot of buyers, but also there's still a lot of stops below this level. A lot of the bulls, they're having their stops here. So that's always something to keep in the back of your head. So we touched the value area low, immediately rejected it. Okay. Come back up here, consolidate a little bit. And where did we consolidate? Right around previous RTH's value area high, right here. A lot of consolidation around this level, broke down below, took some stops, I'm sure, shot back up above it. And, well, you can already see what I did after that, but at this point on this strong bull candle, going up back above the value area high, which is here. Again, I'm sorry if this is cluttered. I'll try to clean it up in the future, but this is how I trade. I guess I've trained my eyes to kind of focus on what I need to focus into, but I definitely see how it could be cluttered. I apologize. I'll try to make it as clear as possible. But yeah, just bear with me. So once we break back above value area high, I'm looking for a little bit of a consolidation, a retest of it again, which you see here on this candle. It doesn't have to be, a lot of the times these retests come quick. You got to be ready for them. So as soon as I see this and then a rejection, I'm looking to get long. I enter on the next candle. It has very good risk-reward ratio. As you can see here, I risk 10 ticks. And what am I aiming for? I'm aiming for that previous week's value area high because that's the next level above where we saw a significant price reversal. Remember, this is where we entered earlier in the session when we broke down below it, we entered short. This is like a line in the sand for me. If we can break above previous week's value area high, it's a very bullish sign. But, I'm not necessarily looking for it to break. I just want to get in and out. So I took my quick trade. I only took a 21 tick profit, and we hit it fairly easily. Barely had any drawdown. Oh, we didn't have it go against us at all. I went back to entry, but then it shot right back up. Both of these trades were very very tolerable. They shot right down below to our take profits, and that was it. And as you can see, as it left quite a bit on the table, as we did on both sides, but that's okay. Like I said, we're not greedy. We take what the market gives us. And now, as you see here, it is currently about 10:20 p.m. Eastern Time, and we're going higher. It's a very slow grind up, not very much buying, but it is overnight. Yeah, so we'll see. Yeah, so I hope that gave a little more insight on how I trade. Like I said a million times, I'll try to clean it up more in the future. But I hope you gained at least a little bit of insight on how I trade a volume profile. This is just like, the bare basics, but it is how I trade. I always try to keep trading very simple and easy to follow. Because once you start getting complicated with a lot of different things going on. Even though this does look complicated, I promise you it's not. It's very simple and easy to follow. basically all we were looking for were breaks of value area highs, lows, retests of them, and enter. As I do more and more of these daily recaps, I hope you become more accustomed to them, because it is a very powerful tool. Volume profile can give you very significant price levels where buyers and sellers, or show where buyers and sellers are. It's become essential to my trading. I guess the only downside to volume profile is it doesn't really give a directional bias. It's more so just levels. I guess you could argue, or I've seen a lot of people argue that it does give directional bias. If you can compare, to where the POC is of the previous day, and the overnight, you see we're going higher. But that's why I use these other charts, different layouts, to show where, I want to be a buyer or seller. But as you can see here, going into today, still consolidating, still in this range. I'm just hoping we can either break up higher or break down below, so we can, finally get some trending days. Be a lot simpler trading. I promise you, this is about as hard as it gets. Once you're in, a tight range, you get a lot of whipsawing, as you can see here. He broke up. You would think he'd be a bull, shot back down. Think he'd be a bear, shot back up. That's how the market works. It takes people stops, keeps the liquidity rolling, and you just have to be prepared. Which is, especially why I like to be in and out of the markets. You never know what's going to happen, and the name of the game is preserving capital. You want to keep your money, and so you always got to be a little more cautious during these trading times of consolidation. So yeah. Let me think if there's anything else that I want to add. I think that's pretty much it. Hopefully it wasn't too tough to follow. Like I said, this is the first time I've ever done anything like this. I promise I will get better, and it won't be. I hope it wasn't too dry or boring. I'll listen back to this. I'm sure I'm gonna hate it, but I will get better. I'll learn from it, and I'll get better. Yeah, I don't want to end it off without forgetting anything, because I do not want to edit this. The last thing I want to do is open up iMovie right now and splice together some audio. So let me just give a quick overview. I did run through it pretty quickly. Tomorrow I might try to, now that I've given at least a little bit of foundation, maybe tomorrow I can get a little bit more in depth with it. Yeah, so thank you guys for listening. This was the first episode. I'll catch you back tomorrow with Tuesday's trading session. Thanks, guys.